Good afternoon, this is Ryan Mallory with SharePlanner.com. Today is November 5th, 2010. I want to go over my two-day trades this morning, and if you were following me in the chat room today, you could have seen me placing these trades real time. They were actually good trade setups. I would say the knock on the performance on the trade was pretty much the fault was in my camp. Could have managed them much better, but I let impatience get in the way of a potentially profitable trade. That said, let's go ahead and dig into the first trade, which was SBUX, SBUX. And where I think I really went wrong here, and I've been noticing this as I go back and look at a lot of my day trades, is I need to be more patient with letting highs be established, firm highs, and I didn't do that. I think it's sometimes best to wait about 5 minutes into the trading session to see what stocks are running and so forth. So, getting in on on the second 1 minute candle or the third 1 minute candle, it might not be a true reading on what the highs of the day are at. So, what I did here is I looked at these highs here in the early morning at 30.79. I got in on the fourth candle, and you can see it was a complete head fake. It goes up a few pennies and then it comes right back down. And where I get myself into trouble at here is this one candle here. I get out at 30.53. It was a loss it wasn't a great portion. I mean, it had a very minimal impact to my portfolio, but what kills you is that high that was established in the first 3 minutes, and you'll see this a lot of times across many different earnings breakout charts, but those first few minutes, you got to give it a time to find its footing a little bit. It's going to be pretty volatile, and like it was here, but you got to let it establish a firm high so that you know that if it breaks above that high, you got a legitimate breakout play. Ideally, this is the high that I should have been working off of, which came in the fourth minute. We get that breakout at around $30.80. It goes much higher, and it gives you an opportunity to book 1% in gains. That's about all you were going to get on this trade. Ideally, you would move your stop loss up to break even, so you basically come away with about a 0.5% gain on the trade. Not a huge amount, but it's better than what happened to me where I actually lose on the trade when that was very avoidable. Rest of the day, it does very little. It does make another run up here to highs, but then tailors off here and pretty much settles at the break-even place. The next one is ATML. Boy, was this a frustrating trade for me. Once again, it was on my own doing here, and I'll show you why. Ideally, these were the morning highs that I was trading off of. I did that right. There was nothing wrong with where I chose to get in at. Where I went wrong at, and you can see I got right here at 9:42 a.m. I get into the long side, but it doesn't really do much after that. Now, looking back at hindsight, you say to yourself, man, why in the world did you get out so early? It didn't really give you any cause for concern, and you're right. It didn't give me any cause for concern. What I started doing is I'm not looking at all this stuff here because none of this has occurred yet. That's all in the future. But what I'm starting to look at is, okay, we're breaking above it. We can't get past that 10.04. So as it's progressing, I'm looking at it, and I start seeing this downward motion here. And we're not really putting in new lows or anything like that, but we are got a little bit of a downtrend working here, and that's getting me a little bit nervous. So I start telling myself, all right, it does that. If it breaks below 992 or 993, I think is what it was. Yeah, about 993. This low right here. I'll draw a circle around it so you can see it. I am going to get out of the trade. It does just that on that 1 minute candle, but you look at the technical picture, it's really not bad. But I get out, and it doesn't really do anything for a little bit, but oh, look at that. You got to ramp up to 10.07. Boom, that's 1% in gains for me. It comes back down. I probably get out at break even with the second half of my shares. Good trade. You know, I made another 0.5%. It's better than losing, you know, a 0.5% like I did. You could have played it again at 10.04, but you got to be a little bit patient. It breaks out and it comes back down a little bit, but ultimately it gives you a nice little run on the day here, doesn't it? Now I don't expect you to hold it through this whole period here. I would, you know, there's not much to trade off of that, but you could have traded again right here at 10.20, another breakout. Play here, and frankly, you could have made, you know, another 1.5% on this trade, and then you could have traded again. You could have stuck with this thing the entire day. You could have made your whole day off of this ATML stock here, where it breaks above 10.37 and it goes up as high as 10.60. So there was, you know, 2% in profits that you could have made there. So there's a lot. It was a great trading stock today. But what I did is I shot myself in the foot by just not being patient enough. You know, I don't have that problem really with my swing trades, but I do have it with my day trades, and God help me, I need to figure out a way to break that habit, because while I do a decent job with day trading, I got to give it more room to run. I just got to. So, in any case, I hope you can learn a little bit off of my self-deprecating or, you know, critical manner of how I analyze my own trading habits, and hopefully you guys don't make the same mistakes that I make. In any case, I hope you guys all have a great weekend. Take care.